looking at investing activities and depreciable assets, and we're kind of given, like, doesn't seem like exactly enough information, and we have to kind of fill in the blanks to figure out the numbers that should be used on the cash flows. So Verlando Company had the following account balances and information available for 2019. And we have land, buildings, and equipment, accumulated depreciation on the buildings and equipment, investment in the available for sale securities, patents, unrealized gain on available for sale securities, retained earnings. And then we have this additional information that says, during 2019, Verlando recorded the following transactions affecting these accounts. Land with a carrying value of $35,000 was sold at a loss of $6,000. Land and equipment were purchased with cash during the period. Equipment with an original cost of $20,000 that had a book value of $4,000 was written off as obsolete. A building with an original cost of $60,000 and accumulated depreciation of $25,000 was sold at a gain of $23,000. Depreciation expense and amortization expense were recorded. Net income for the year was $60,000. A patent was acquired during the year in exchange for 1,200 shares of common stock with a par value of $1 per share, market value of $26 per share. Additional marketable securities were purchased during the year. Verlando Company has no notes payable in the liabilities section of its balance sheet. So first, assuming that Verlando uses the indirect method to determine operating cash flows, what is the amount of depreciation expense and amortization expense that would be added back to net income? And so really the easiest thing for us to figure this out is going to be to create T accounts and then use this information to see how we got from this January 1 balance to the December 31st balance and fill in what the missing information. And so up here I'll just do a accumulated depreciation T account. And so what information do we know for sure? We can come to the accumulated depreciation and there's a beginning balance of $50,000. And we know there's an ending balance of $36,000. And then let's figure out what else we could fill in here. So we can ignore this land for now. Equipment with an original cost of $20,000 and that had a book value of $4,000 was written off as obsolete. So if it had an original cost of $20,000 but the book value was $4,000, we can solve for the accumulated depreciation that would be included in this journal entry when we wrote off that equipment. And so we can say that $20,000 minus $4,000 means we would have debited accumulated depreciation for $16,000 for this equipment. We also see here that there is a building with an original cost of $60,000 and accumulated depreciation of $25,000 that was sold at a $23,000 gain. So we know that accumulated depreciation would have been debited for $25,000. And that's all the information related to accumulated depreciation. So now we can solve for our missing, let me make this blue, accumulated depreciation, which would be our depreciation expense for the period. And so our $36,000, we can add these debits, subtract our credit, and we get depreciation expense for the period of $27,000. Now for the amortization expense for the period, we're going to look at the patent information. And so let's do a T account for our patent. I'm actually just going to copy this. And so we have a beginning balance on the patent of $10,000, an ending balance of $25,200, And then if we look into the information, we can see that a patent was acquired during the year in exchange for 1,200 shares of common stock with a par value of $1, market value of 26. So we can say 1,200 times 26, and we get 31,000. And so what was our amortization expense? And we can solve for that because obviously we have an ending balance of 25,200. And so let's double check. Oh, okay. And so we get 16,000 for our amortization expense for the year. Those bold and blue. So now part 2 is to prepare the investing activities section of the statement of cash flows for the year ended December 31st, 2019. And so we're going to do the same sort of thing. We'll do a T account over here for land. And I'm just going to copy this while we have it, in case we need a couple more. Okay, so for the land, we had a beginning balance of 45,000. We have an ending balance of 85,000. And then we also know that land with a carrying value of 35,000 was sold at a loss of 6,000. So we know land left for 35,000. And then land and equipment were both purchased with cash during the period. So nothing else pertains to land. So we can solve then for the missing information here. And I suppose that's actually going to be our purchase of land, the proceeds from the sale. We'll come back to in 1 second. So we'll solve for our missing value here, which is 75,000, and that's going to be the purchase of land. For the proceeds, if it had a carrying value of 35,000 and was sold at a loss loss of 6,000, we know it's just the difference. So that 35,000 minus 6,000 gives us the loss of 29,000. Or sorry, not the loss of 6,000, just the proceeds of 29,000. And then this payment for the purchase of land, we really want that to come over as a negative number. Now we'll look at our proceeds for the building and equipment. And so again, we come up, we had a beginning balance of 100. We have an ending balance of 210. Then we know that equipment with an original cost of 20,000 was written off, so we have to credit that 20. And a building with an original cost of 60. And that's it pertaining to the building. So we can solve then for the missing amount that would show us the payment of the purchase of the building. And so our payment for the purchase of buildings is $190,000. Now let's go back up to the proceeds from the sale. We have building with an original cost of $60, accumulated depreciation $25, sold at a gain of $23. So we'll say equals that $60,000 minus the $25,000, and that'll give us our book value, and then plus the $23,000 gain gives us proceeds of $58,000 on the sale of the building. Then our payment for the available for sale securities, we come up here, we have a beginning balance of $16,000, an ending balance of $29,000, and there's no additional information. So that one's as simple as the difference between the two. I really should have done it the other way so it gives us the negative. All right, and so then we can do a sum. And we get net cash used for investing activities of $191,000. Let's make all of these comma style. Then finally, prepare the disclosure for significant non-cash transactions for the statement of cash flows for the year ended December 31st, 2019, starting with the investing activities and then the financing activities. So the acquisition of patent by the issuance of common stock. And so that will be the 1,200 shares times the 26, and it's reported as a negative. So we'll put negative 1,200 times 26. And then the financing activities, the issuance of common stock for the patent will be the same 31,000, just reported in the positive. And that is it for this problem. Switch this really quickly.